Hello, good morning friends. Welcome to my channel once again. So today we are going to discuss about the powerful candlestick patterns for the reversal trade. As you know, there are more than 1,000 candlestick patterns, and that becomes very difficult for us to remember, understand, and to use them in our trading hours. So from that 1,000 candlestick patterns, through my experience and learning from the expertise and professional traders, there are almost five powerful candles that we can easily understand and use in our trading sessions. So we will discuss about the five powerful reversal candlestick patterns in this session. Number one is hammer candle. As you know that hammer candle is just like the hammer, which has a very small body and long wick, especially below the body, and upper side there will be a small wick, but it should not be more than 25%, and the lower wick should have a maximum size of 2.5 to 5 times of the body. So that considers to be a very strong hammer candle. So let's see in our chart. Now how to use this candlestick pattern while we are trading. Let's say the market is in the downtrend and suddenly there forms a hammer type candle as you have seen here. But we should not trade directly seeing after that hammer candlestick. We have to wait for follow-up candles which should be close above that hammer candle, and that gives us a hint or alarm, so that right after crossing the high of this follow-up candle we can enter, keep the stop loss below the hammer candle with buffer of 1 to 2 points, and then we can write the reversal trade. But it should be formed at the important level in the support. After that identifying, then only you should trade. Now another candlestick, number second, is the inverted hammer candle opposite of the hammer. Same as hammer, it should not, the lower wick should not be more than 25% of the body, and the higher wick size should be more than 2.5 to 5 times of the body sizes. That considers to be a very strong inverted hammer candle. So let's see in our chart and how we have to trade. We will discuss it. Now as you see that market is in the uptrend, suddenly there forms a big candle, inverted candlestick, hammer candlestick. After observing that, we have to see the follow-up candle should close below the low of the inverted hammer candle. We call it shooting star candle also. We should not trade right after that. We should wait that the low of that follow-up candle should be broken. Only then we can enter by keeping the stop loss 1 or 2 points above the candlestick inverted hammer or shooting star candle, with 1 or 2 points above that hammer candle, and we can enter in the trade, and we can write the downward bearish trend. Now the third type of candlestick, we call it Doji candlestick pattern. This is also part of the reversal candlestick, which is very powerful. The closing and opening will be at the same, or it should be less than 5% of the body as per the wick. It should be smaller than the wick. The color doesn't matter. So now let's go and see how we have to trade. Market is in a downtrend and suddenly there forms a doji type candle. Just by seeing just a doji, we should not trade. We have to wait for the confirmation, and the follow-up candle should cross above the high of doji. That gives us a signal, and right after crossing above the high of follow-up candle, we can enter the trade as a reversal trade. We can keep the stop loss below the doji with 1 or 2 points buffer zone. and we can enter the trade and write the reversal trade. Now the first is for the bearish to bullish reversal trade. Now we are going to look at the bullish to bearish reversal trade. Yes, the market is in the uptrend and suddenly there forms a doji candlestick pattern. The candle color is not important, whether it is green or red, it doesn't matter. We can observe it and we can wait for the confirmation. The follow-up candle should close below the low of doji, and then we have to wait for another third confirmation that the low or closing of that candle should be broken by the follow-up red candle. So we can enter the trade and keep the stop loss above the doji with 2 to 3 points buffer points above that doji, and we can write the bearish trade. Now the fourth candlestick pattern we are going to discuss is inside or baby candle. We call it baby because when it is in bullish trend there will form a very big green candle, but immediately after that there will be a small candle totally inside the big candle. So we call it bearish reversal inside bar or baby candle. And the candlestick low and high wick with the body should be inside the mother candle. That big candle we call it mother candle. In the same way, when the sign of reversal from the bearish to bullish, we can see very big red candle forming, and inside that totally one opposite color of green candle will be formed, which should be totally inside the size of mother candle, and we can play the reversal trade. Now let's check how we can trade with this. During the reversal from bearish to bullish, first we have to see the market is in the downtrend or not. So here the market is in downtrend. Suddenly there forms a baby candle inside this red mother candle, totally fit inside the mother candle. We have to wait for the candlestick to break the high of mother candle, then we can enter the trade and we can get the reversal trade towards the bullish side. Same way it will consider in the bullish to bearish reversal trade. Let's observe that in this chart that market is in bullish uptrend, and suddenly there forms a very big green candle. Inside that opposite red candle is formed inside the mother candle of that green. So that gives us a signal. Now what we have to do, we have to wait for the confirmation. As soon as the mother candle low is broken, we can enter in the trade by keeping stop loss above the high of this mother candle with buffer of 1 or 2 points as a stop loss, and then we can write in the opposite direction of the trend. It is bearish trade. Now the fifth and final candlestick we are going to discuss is outside or engulfing candlestick pattern. Engulfing means totally covering the previous candle. In the bullish way, it will be first there should be red candle, small one, and that green candle should cover all that red candle. We called it bullish engulfing, which indicates that the trend will be reversing towards from bearish to bullish. In the same way, when the market is in the uptrend, there will form a small green candle and followed by total big candle engulfing that small candle, which signal us that the trend will be changing from the bullish to the bearish. So let's see the example in the chart. Here you can see that market for the bullish engulfing, we have to first look at the market trend in the downtrend, and suddenly there forms a small candlestick and which is totally engulfed by the followed big green candle. That gives us a signal And the condition where we have to enter is when the green, this big engulfing bullish candle else high is broken, we can enter in the trade and right towards the bullish trend, which totally reverses from bearish to the bullish side. In the same way, during the bull uptrend, certainly we can find that small candle forming at the resistance level, and right after that the follow-up candle will engulf, cover all that green candle, which signals us the trend might change from bullish to bearish. So we can enter the trade as soon as the engulfing bearish candle is broken by keeping stop loss above the high of engulfing candle with 1 to 2 points of buffer as a stop loss, and we can write in the opposite trend trade. So it is very important to note that always trade from the important level like support and resistance with using the mentioned candlestick pattern. You should have a confluence of support and resistance in order to trade a reversal trade followed by the candlestick pattern as we have discussed. Number one is hammer type candle, which can provide us a signal that the market trend will be changing from bearish to bullish. We need to find the hammer type candlestick pattern. Number two is an inverted hammer, where the bullish trend will be reversing to the bearish trend at the resistance level. We can identify the inverted candlestick pattern. And for doji type, we can play both for uptrend reversal and downtrend reversal. If we find doji type in the support level, we can opt for the reversal trade to bullish. If doji is found in at the top of the resistance level, we can take a confirmation trade from bullish to the bearish side. And inside candlestick pattern, we can find the baby candle. As you know that a baby candle, if it is formed at the support level, that signals us that the trend will be reversing from bearish to bullish. If we find in the top of the resistance level, we can get information that the trend might reverse from bullish to bearish. For outside candle, same way as inside candle, if we find it at the support level, we can go for the reversal from bearish to the bullish by keeping the same conditions in mind. And if we find that engulfing or outside candle at the top or resistance level, we can play the reversal trade from bearish to bullish to bearish with the same condition keeping in mind. So thank you so much for your time, and if you find this video is valuable, please do subscribe our channel and like this video. Thank you so much.